So welcome to everybody that's here. Thank you to the esteemed panel of speakers that are here tonight with us, as well as all of the attendees that are listening. And then to everybody that's listening to this as a recording, we're very glad that you took the time out of your day to listen to it. My name is Gav Blaxberg. I run the Wolf Financial account, as well as being the COO for Wolf. And I run our podcast and a bunch of other stuff along those lines. And I've recently taken a fascination with technical analysis. And because of that, I've tried to surround myself with some of the best people in the business for technical analysis. And of course, you can always mix in fundamentals and other areas, alternative data, but there's a real value to some of the technicals and the different platforms which you can find them on. So for this evening, we are going to have 4 different speakers, even though you may see a lot of David Green accounts up here on the screen currently. I assure you there's only one. So yeah, our speakers tonight are going to be Jake Wujastyk from Trendspider, one of their founding team. Also, I believe runs their Twitter for Trendspider. Dan Ushman, who is the CEO of Trendspider. Peter Tuchman, not live from the floor of the NYSE currently, probably, as it's 8:30 p.m. at night, but there almost every day since '85. And David Green, an esteemed trader from Wall Street. So thank you to all of the panelists for coming tonight. For everybody that's listening, just a quick rundown on how this is going to go. We're going to aim for 15-minute slots for each panelist. And then try to take, 1 to 2 questions afterwards. So it's luckily we're not starting too late. It's 8:37 now. So we'll probably run this first slot is going to be Jake. That'll run for about 15 minutes. I'll have the opportunity to talk over some tickers that he's been looking at this week. Give us a peek into different stuff that he uses on the Trendspider platform. Then we'll go on to Peter. I think Peter's going to be talking from a bit more higher level because he is can't touch on individual tickers due to regulatory reasons, but he'll be giving, Peter always comes with passion. He'll speak about why he's using technical analysis. Then we'll move into David, and then we'll finish out with Dan. That's the plan for the evening. That is most of the talking that I'll probably do, except for taking questions in between each. For now, I'm going to go ahead and turn it over to Jake to lead us off. And, any questions that people have from the panel. I see we already have 3 questions that came in. Jake or Dan, you can feel free to hop in and answer these questions at any time. But if anyone in the audience has questions that come up at any time, we have a very manageable size audience here, so we'll probably get to all of your questions. So feel free to drop them in that box. Without further ado, Jake, the floor is yours.
All righty. Thank you for having me, and glad to do this again. Last time we did this, I kind of focused on some features like a multi-time frame analysis. I think I touched on a little bit on the anchored volume by price, but today I really wanted to focus on kind of the volume tools on the platform. So the anchored volume by price again, and go over a case study on kind of how that works and how I used it in a real life trade, I guess, in the last couple weeks or week and a half. And then go over the anchored volume weighted average price, which is a tool to really use in conjunction with the anchored volume by price. And then we will touch on raindrops because I guess we already had a question about what exactly is a raindrop, the benefits and all that. So let's jump right into it. Can you see my screen now?
Yes, sir.
Okay, perfect. So I wanted to really kind of touch on a real life example, not just go over a bunch of theory on, hey, this is how this works. Wanted to go over an example on UPST. This is a trade that I took over the last week and a half or so, using the volume by price, using the anchored volume weighted average price, and kind of go over the thesis in why I entered it and kind of how I use these different features to do so. So UPST, this is one that really originated on the weekly chart for me personally. I'm more of a position trader, swing trader. In this case, this was more of a swing trade than a position trade. Didn't really want to hold into earnings and kind of give away the profits that I had made. So I did go ahead and take the rest of my profits on this today, but it's always fun to review trades and how they worked out. So the first thing that really got my attention here on UPST was actually something, very non-proprietary to the platform. All I was looking for really to start my initial interest in this play was simply the number of red candles in a row that we had on UPST. So we had 1, 2, 3, 4, 5, 6 red weeks in a row on UPST. You could see here that we were getting lower lows each week, but we were getting kind of marginally smaller lower lows each week until we finally touched the anchored volume weighted average price from the IPO. So, the anchored VWAP is something that I use pretty much all the time. And something that I like to use with the anchored VWAP is the percentage bands around the anchored VWAP. So you can see here that if we remove the percentage band here, let's just go to no bands. You'll see here that this anchored VWAP from the IPO has not been perfect. There's been a couple times where the price actually broke down through this level. So it was not a perfect level. The price did respect it overall, but there were times where we did break through. So the first thing that I did was really define my risk on this trade. And my risk was really where the price has respected this anchored VWAP in the past. So what I did was I just went to what's called the percentage bands on the anchored VWAP. And in this case, I just did a couple trial and errors and came up with a -10 percentage band. What does that mean? It means that I created another anchored VWAP 10% below the original IPO anchored VWAP. And you'll see that captured a lot of these wicks here that did break down through that IPO anchored VWAP. There were a couple times back in March that we flushed even lower than that, almost like 20%. Before reversing and hitting these new highs back in March into late March and early April. So I did know that, this was definitely a possibility that we could break down and have a little bit of a flush. So this is the way I kind of defined my risk to see, okay, well, if we do break down, this 10% level below would definitely be kind of my make or break, even though the price did flush a little lower and we reversed. So this was kind of an area for me to just get an idea of where do things start getting a little sketchy. And you could see here that in mid-July, we did have finally a green candle here. And that was really my trigger to start a position. So on top of that, if we're measuring the volume by price from the IPO, and we're just using the IPO as your anchor, we're one with the VWAP, just measuring what is the volume weighted average price? What is the average price per share paid since the IPO? And you can see, the price really respected that on the way up. Now, anchoring the volume by price from the IPO is measuring the distribution of shares since the start of the IPO. And you can see here that not only was the price trading at the anchored volume weighted average price, which is this blue line, but it was also trading right at this point of control and right at this, what I like to call a volume shelf. The reason I like to call it a volume shelf is because, a lot of people just look at the POC, the point of control, but I like to look at the cluster of volume nodes around the point of control, not just the exact point of control. And so you could see here that, we were trading right at this huge cluster of shares. And what does that tell me? It tells me that there are a ton of shares holding at break even. Because if we're trading at, let's say, $100 and $115 and whatever cents, we're pretty much trading where all of these shares are holding at break even. So we know that, the supply is likely starting to dry up, because if everybody's holding at break even here, you're only going to get so many more sellers because there's nothing to sell. There's no profit to sell. So that supply is going to dry up. So anytime the price is trading at a volume shelf, it's what I like to call, we're pretty much trading at a break even kind of shelf. Now, when it gets interesting is when we start to break above the volume shelf. And that's when I really start to get bullish, at least for some type of impulse move to the upside. Now, a lot of people would ask, well, what's your target above? And this is simply where I just start another volume weighted average price from this all-time high, which is kind of your swing high here. And you'll see here that this was my target above. So my entry was kind of the bottom here. Once we defined at least a short-term bottom with this green candle, I entered initially around 114.50. And then I did add from around 118 to around 120. I think my dollar cost average was around 118.50. So my stop loss was definitely, a function of this previous weekly low, but I did know that we could even drop even lower to around 98, because that's just where we had bottomed out before in these previous bottoms and these swing lows. So the fact that we held this area, the fact we had the volume shelf, this was kind of, all of these things were kind of right in line. Now, I don't use the MACD a lot, but the MACD on the daily chart was also something I was paying attention to. So you can see here that there's not a lot of price action here, so you don't have a ton of MACD crosses, but the last two crosses, we did have quite a big move up. So we crossed on July 22nd. You can see that the price was also holding this, this trend line. And this is one thing I like to use on the volume by price. Now, the volume by price is not something that's incredibly unique to Trendspider, just the ability to see shares. What's unique on Trendspider and what makes it a very efficient tool is the ability to easily visually move this line for your anchor point. So what you can easily do is you could technically go move this anchor point to the start of this trend line, and we can pretty much say that we know what the volume profile is of this uptrend, because we're measuring the volume by price from the start of this trend. So we can essentially see the distribution of shares within this uptrend that started back in March. Now the uptrend has been happening, but this is kind of your pivot here before the next leg up. And so to me, you had your support trend line here. So once it held a couple times, we've got a couple data points here where the price is really respecting this area. On top of that, you had the volume shelf. You can see here finally on July 29th is when we moved above the point of control. We pulled back and held the point of control. And then this was your big move yesterday. And then this was your gap up today. And that's when I exited my final position. So this is something that's really nice. UPST was an example that I traded. HIMS is an example that I am trading. And I'll kind of show you guys why.
I'm in that one too.
Sorry?
I'm in that one too.
Are you?
Yeah.
Yeah, my brother.
Yeah, me too.
Yeah. Hey, everybody is liking the men's the hair product trade. Yeah, so my brother told me about this last week. I started teaching my brother a little bit about technical analysis and getting him into the markets, and he's like, "Yeah, check out HIMS." And I'm like, "Okay, I've never heard of it, but I'll check it out." And so, I kind of did the same thing. I anchored the volume by price from this swing high from June 8th. And I noticed something really interesting. One, I noticed there's a ton of shares aggregating right around this bottom here. So that was kind of the first thing that caught my eye. Two, I like to use the Williams percent range and the MACD to look for divergence and just overall trend reversal. So the main thing that I was watching here on the percent range, and this is kind of an indicator that you can use to look for divergence. And all I'm looking for is I'm looking for lower lows on the price. So in this case, here was your initial low, and here's your low on the percent range. As you can see, the price is hitting new lows. As you can see, the percent range, it has an upward sloping lower or higher lows here. That's your divergence. So you have it on the percent range. You have these higher lows. You have another divergence here where you've got a low here from May 13th around 814. Then you've got another low here around 786. And you can see that the MACD is actually hitting a higher pivot here as well. So the MACD is curling. It's showing some divergence. Turn on the RSI. You've got the same exact thing here. And I'm not really a big lower indicator person until we get to really big overextensions to the upside or the downside. So here, I mean, we've literally just been walked down from $15.50 all the way down to $7.90. Almost every day we've hit a new lower low, give or take a couple days. So anytime I see pretty much a linear type of drop here on price, to me, that looks like the price is just kind of coiling for at least some type of short-term spike, just so, shorts kind of cover, and then you've got this impulse move. And sometimes that's all the move you're going to get. But for me, you've got the divergence on the RSI as well. You've got the divergence on the MACD. And then using the anchored volume weighted average price like we did on UPST and using the anchored volume by price from the swing high, we know that one, there are a lot of shares holding at break even here. How do we know that? Well, the price is trading right at this volume shelf and this point of control. So this is what I really like to look for, is these shelves that price starts to respect. And then my upside target is simply just the volume weighted average price. So on UPST, The volume weighted average price from that all-time high was around 129.50 to around 130. So that was my target above. For HIMS, my target from the anchored VWAP swing high is right around $10.11. Now, keep in mind, this anchored VWAP is a function of time. So the longer that the price trades below this volume weighted average price, it's going to continue to move down because the average price per share is continually below this average at $10. So my point here is, if we went straight up tomorrow, impulse move up tomorrow, we're probably going to test or your anchored VWAP at least target above would be 1013. Well, let's say that we chop around here like this and do something like this, then your anchored VWAP is also going to continue to also move down, maybe look something like, and you're probably going to meet somewhere closer to maybe 975. So just keep in mind, anytime you're looking at anything diagonal or anything like a moving average, if the price is below that, a moving average, over time, the moving average is going to continue to move down towards the price if the price is lower. Same with the volume weighted average price. So my target, I can't really say my target is a hard price. My target is simply just the anchored VWAP, and however long it takes for the price to get to that anchored VWAP is where my target's going to be. Right now, that's around $10. If this takes maybe 2 weeks, then that anchored VWAP may get down all the way to 950 to 975. So just remember that these are moving targets, especially when the price is below a moving average or an anchored VWAP. So those are two tools that I really like to use. The anchored volume weighted average price with the percentage bands will really allow you to capture some of that margin of error around the anchored VWAP if it's not perfect. And so you can pick up some of those areas where price hasn't respected it perfectly, like we saw in UPST. So that is something that's really unique on the platform, to be able to create those bands. And then the volume by price is something that I just use all the time. And it's just a simple, very efficient way to anchor different spots on the chart. Simply move this thing back and forth. Wherever you want to anchor, that's where it's going to start. And so I like to anchor from swing highs and swing lows or all-time highs. And hopefully this was helpful, kind of understanding a lot of my thought process and finding some of these patterns, and then using some of your generic indicators like RSI, percent range, and MACD to kind of look for confirmation of a potential bottom.
Sweet. That was awesome, Jake. Honestly,
thank you, Jake.
Yeah, thank you guys.
David, did you have a question?
That's some other David, but he is asking what time frame you're looking at.
So yeah, I'm on this, I'm looking at daily, but for my style of trading, I'm rarely looking below the daily candle. I will use the 65-minute candle simply because, as I was taught by Brian Shannon, 390 minutes in a day, divide that by 65, you get 6 even candles. If you use an hourly candle, even though a lot of people use an hourly candle and it can become kind of a self-fulfilling time frame because so many people are using it, you are technically only using 6.5 candles in a day, because 390 divided by 60 minutes is 6.5. So that last candle, or that first candle, is technically only a half candle. So 65-minute, daily, weekly, and monthly are definitely my go-to time frames.
Excellent, Jake. And would you say, I think you mentioned it earlier, that more for swing trade setups?
For sure, but this is a fractal type of setup. So like if we went to a 15-minute chart and you have a swing high, you could do the same exact type of setup here. It would just be 15-minute candles. So you can use this in shorter term time frames, but just from my experience, I definitely have found some success using it more on the daily. But I have done some research on let's say a 30-minute time frame, and the price does respect it. Wish is a good example of this. So I was watching Wish on the 65-minute candle here. So I traded Wish last week. I bought some, where did I buy? I bought Wish at around $9.63 spot, but I entered the August 20th $11 calls. So I sold it on this impulse candle here. There's no way I'm not taking profit on that short term of an option when you've got this big of an IV spike from this type of move up. And so this was the 65-minute chart. And you can see I anchored the volume weighted average price and the volume buy price from this pivot here. And you can see how well the price respected this area multiple times. So I like to use the volume by price and the anchored VWAP together. And you can see how well this the price respected this on more of an intraday type of time frame.
Excellent. That's a great explanation.
Thank you.
Great stuff. Thank you, Jake. That was incredibly informative for me.
Thank you, guys. I'm looking forward to hearing your guys' takes, and I will hand it back over to you, Gav.
I'm thinking about leaving right now.
Hey, you guys are the huge pros. I'm here being honored just to be on a presentation with you guys. So I'm excited to hear what you guys have to show, and I'll hand it off and stop sharing my screen.
Now, Jake, what one thing that me and Peter will tell you, and I'm doing this for 35 years, and I am always learning, and there's no ego involved in trading, and anything that anybody finds that helps them become a better trader is useful. So experience has nothing to do with that, Jake.
Correct.
Yeah, well, I love that, and I appreciate it. And like I said, it's an honor. I definitely have a big smile on my face being able to do this with you guys. So you guys could see that if our cameras worked, but next time we'll get that next time.
Yeah, we're probably all better off.
Yeah, we'll work on that ahead of time for the next one. Absolutely. Yeah, appreciate that, Jake. And maybe if you want to touch on a couple of these questions that are going on inside of the Q&A, I think that you'd be best suited for that. Awesome. And then we can keep things rolling here. So Peter, let's go right into you. I know that you had some stuff prepared. Excited to hear it.
Sure. Great. Thank you, everyone. Gav, appreciate it. Really, really wonderful to be on the call. Actually, so honored to be with Jake and Dan and my friend David Green, who I've been partners with and friends with for 35 years. You know what? As David said, guys, I am a student of this market. I've been trading for 35 years. And it is so exciting for me to have a new generation of people with new eyes on technical analysis, eyes on the market, eyes on the game. And so that was so incredibly informative for us because for me personally, because I trade with a different strategy on a daily basis, I'm forensically breaking down markets and why they're doing what they're doing. But just to hear your explanation, to see the technology you're using is incredibly excited, and you handled it so well. So it's an honor to be with you guys on the call too, and I appreciate it.
Thank you so much.
You know what's exciting? My pleasure. It's so exciting to know that we're all in sort of the same stocks too, which is sort of cool. So hi everybody, my name is Peter Tuchman. I am known as the Einstein of Wall Street. It's sort of a gnome that was given to me over the years, more for the fact that I look like Einstein than I'm surely not as smart as he by any stretch, but that's all fine and good. I trade on the floor of the stock exchange. I am still there on a daily basis. I represent a couple of hedge funds on the floor, and I've built a trading model around trading the openings, IPOs, and the closing market on closed template. But that's not what we're here to talk about. What I'm here to talk about is that for me, this is surely one of the most exciting times to be in this market, right? So I'm down there every day. I've been watching, what's been going on in the market, let's say over the last year and a half, let's say, after February 12th, 2020, the big sell-off into the pandemic and the incredible surge of the market since then. But even more significantly, what's really been going on with the democratization of the marketplace, the barriers to entry to be down, and this whole new incredible generation of young traders coming into the market, young, old, the men, women, whatever, into this marketplace, the 40 million plus new eyes that are on this market that are watching you guys at Trendspider and David Green and I at Wall Street Global Trading Academy. For us, that is the most exciting thing, right? The fact that we have all these new eyes, all these people to inspire and motivate in a market that is having generational moves in volatility, vaccine, the virus, whatever it is, the meme stocks, crypto, whatever brought you all here on this call, whatever brought you to the market, this is not your grandfather's stock market, right? Okay, this is a different place. And what goes on here on a daily basis is different. And so because of what's been going on and the volatility and the enthusiasm and the excitement and the fact that social media and the internet and the Wall Street bets and the Reddit and the meme stocks and crypto has sort of come into, and Robinhoods and all of this stuff has really sort of leveled the playing field and sort of really thrown the playing field into a wild earthquake. So it's leveled it in a way that everybody's been invited to this party finally, right? So many people who were never ever allowed to play in this field are now like, it's come on guys, show up at the party. We're having a ball here. People are making money. It's awesome. But our fear is, and one of the reasons that David Green and I, who have known each other for 35 years, David Green will tell you his story, but we traded on the floor together for many years. He went on to become an educator. I continued to be a trader on the floor, and now more of a motivator and an educator, and still a trader. Is that the most important? We're hearing about a lot of people who think they're rock stars, who hit buy buttons on March 23rd, 2020. And they're using the internet and hope as a strategy for trading. And the few people who became Dogecoin and crypto and meme stock millionaires, but we're not hearing about the people who came to this party to play without the education to navigate a volatile market and are getting blown up, right? We know the facts are that 80+% of day traders fail. And that's just because the odds are not in their favor. We know that in a market with volatility and the vacuum on the way up of multi-digit moves and the spiders and the ETFs and the memes and everything are on the way up and on the way down is really dangerous turf to play in if you don't know about risk management, if you don't know about technical analysis. So it's kind of why I stepped aside from, I haven't, left the work I do on a daily basis. I get up every morning. I'm in there trading IPOs. I'm in there with limit up, limit down, trading the meme stocks. I'm in there trading market on close every day. And that's my life because it's the greatest job on earth. My fear is that all these new people who have been invited to this party, are coming in. They don't have the tools to navigate through this, right? It was all fine and good when markets were doing nothing that go up from March 2020 on. Now that we're in some murky waters, we're in earnings waters, we're in a lot of different things going on, and people are getting battered around. And I would hate people to suddenly be invited to this incredible party of potential for financial independence and a bunch of fun new disposable income and get drunk at the party and end up sitting out on the curb, smoking a Camel Straight and drinking some Hennessy because they lost all their money and they blew up their account because they didn't know about stop orders. They didn't know about turning a winning trade into a losing trade. They didn't know about that you don't take financial advice from somebody who does not have your best interests involved, who's on the internet telling you that AMC is going to the moon, hold the line, and you end up holding the bag, right? So that's why we're here. That's why I've done what I've done with David Green, which is curate this awesome course on technical analysis called Wall Street Global Trading Academy. It's affordable, it's fun, it's engaging. It's really basically people who don't know a stock from a stock, people who have been day trading and getting battered around by this market, people who just want to take their advanced trading to the next level. We have 35 years together. David and I have 70 years of experience. We are here forensically breaking down the market on a daily basis. David Green's been running a chat room and boot camps for multiple years, has taught thousands of people how to trade this market. So we picked this time to curate this thing so that everybody who gets an opportunity to put the probability in their favor that they're going to win at this, that they're going to be successful. That is our motivation. Our differentiator is that we mentor people, right? And so I was so enthused by Trendspider because it's technical analysis at its finest, but it's totally different than what we do. And so it's amazing that everybody is going to have the opportunity to learn from you guys and use your platform. They're going to maybe get a chance to learn from us because we are really different than you. And everybody learns differently, right? This stuff is not easy. It's not rocket science, but it's not easy. It's not a get-rich-quick scheme by any means. So some people will respond well to your platform, and I'm super excited. And I look forward to looking at it more. And some people may respond differently to ours. I would bet together a mix of the two of them would be super, super fun and cool. So anyway, we mentor and we coach everybody who buys our course, which is super fun. Every Thursday, everyone who buys the course, we go on a live Zoom call. So we hold your hand through the process. We teach you the language of the stock market, how to set up your charts, how to do the 5 trades of technical analysis. We're kind of trying to keep it simple. you do what you're doing and that works for you. And that's so great. And it was so exciting to see. We use what we use because it's been tried and true by David Green in his live chat room, which he's had for 10 plus years. So I'm going to pitch it off to David. David's going to share his screen. He's going to tell you a little bit about him, about Wall Street Global Trading Academy. I'm always available to anybody who wants to chat. I'm all over Instagram. I'm all over social media. This is a new launch we did back in February or March. It's really taking off. We want to create a community. We want people to interact with each other who have taken our course and who are working on your platform. You know, the more the merrier. As I said, I am every day, 35 years, a student of this market. And if we can help each other create a community where everybody becomes profitable and makes money and comes to this party and has some fun, that's my motivation. So I pitch it to my partner, Dave.
Thank you very much, Peter. What do I have, like 3 minutes left, guys? Is time almost up?
30 seconds.
30 seconds. All right, how was everybody doing?
Take your time. Floor's all yours.
So I want to mention a couple of things. That Jake mentioned one thing when he first started his talking about his presentation. Yes, I've been doing this for 35 years. I worked on the Florida New York Stock Exchange. Me and Peter started there around the same time in 1985. I worked there for about 14 years, and I was able to, trust me, more luck than anything else, retire when I was 38 years old at the end of 1999. For the last 10 years, I have been trading for my own account and teaching people how to trade and then mentoring them once they have gone through our process. I trade the markets live every single day in my private chat room with my traders in a real money account in real time. And I know we don't have a lot of time to discuss a lot of different things tonight, but one thing that Jake met, first of all, is anybody here? Let's get some ones if there's anybody here. Everybody type in a one so I know everybody's alive. Anybody in the room that knows who David Green is? Give me a two if you know who David Green is.
Everybody knows. There you go.
I trade the markets. Also, I trade the markets live with Benzinga every Monday, Tuesday, and Wednesday from 9:30 to 11 o'clock. We do live trading with them. And one thing that Jake mentioned that I have to mention before we get into technical analysis and stuff that I'm going to talk about. One of the first things that Jake said was managing your risk, right? And that is probably the most important part of any trading. I don't care if you're day trading, swing trading, options trading, investing. Managing your risk and money management is the key to being a successful trader in any kind of trading that you are doing, right? Big losses don't come by surprise. Something, when you're looking at your P&L, something doesn't sneak up on you and all of a sudden you're down $10,000. So what we do is completely different. I am an active day trader. So I think today we had 7 or 8 trades that set up for us. And I don't think we lost, maybe we lost on one, but we're actively day trading. So I'm looking for opportunities all day long, no matter what the stock is. Doesn't matter what the stock is. Today, we traded a couple of stocks that I've never heard of before in my life. ARCT, Hood was one that we've all heard of lately. But to me and to us, it doesn't matter what the stock is. It doesn't matter what the stock does. It doesn't matter. The only thing that matters to us is price action and technical analysis, along with your money management skills. I wanted to show one of Jake's stocks that he was talking about, HIMS, because some people have come into my room recently in HIMS. And this is a meme stock, right? Or for a couple of minutes, it was a meme stock. And the stock went from $8 to $25.40. And I've had a lot of people come to me in recent weeks and months that have joined my trading room and have purchased a course that are still stuck in a lot of these stocks. And as Peter mentioned earlier, I mean, I know for a fact that more people have lost money in these stocks than made money because they get into a stock like this because they heard it on Wall Street Bets or whatever it is, and 25 isn't enough. They think it's going to go to 50 or 75 and 100. And inevitably, and I could show you 20 charts like this, this is what happens to all of these stocks, right? I kind of like Jake's call now because I think it has made a short-term bottom. We went down 8 days in a row, and we've made a little short-term bottom here. So I kind of like that. So, but anyway, I just wanted to show you a meme stock and what's been happening in a lot of these stocks lately. Don't get caught in the hype in these things, guys and girls, okay? It's the worst thing you can do. Don't listen to anybody out there who is telling you that GameStop is going to go to 1,000 right? And we look on a weekly chart, and it went to 483. Everything we do is based on technicals, and I'll give you a quick analysis of the technical stuff that we use, and we use it because it works for us. And again, this is for short-term trading. We use 4 moving averages, a 9 exponential, 15 exponential, 65 exponential, 200 exponential, and pivot points. So this is a trade that we did a while back in GameStop, and not only did we not get involved in this whole entire run, we didn't get involved until it came down and hit our trend line all the way down here when the stock got to $120. And you can see when the stock came down to our support levels, it bounced off that level, and within a week, the stock went up 60 points from there. So everything we do is based on technical analysis, using the moving average that we just talked about. I want to talk to you about a couple of live trades that we did today. And again, everything we do is based on technical analysis. Boeing was a trade that we did this morning. I want to show you why and where. Okay, again, all technical analysis. We were watching this stock very early in the morning. These dots that you see in our charts are pivot points. So in addition to all our moving averages, we use pivot points. When a stock is going down, we are looking for levels of support to buy a stock. And we were watching this stock early in the morning in Boeing, and the stock went down from $226 to exactly $221.30, down $5. We had a support level at $221.50. So this stock hit our support level, didn't break it by 17 cents. And I want to show you what the stock did the rest of the day. This stock, the rest of the day, from that moment on, $221.50. The stock closed at 4 o'clock at $229, up $7. So some people are looking to do swing trades and make $2, $3, or $4. This was a $7 trade that happened during the day today. It got in based on technical analysis, and they never showed us a reason to get out of the trade based on that same technical analysis. So I want to show you a couple of other things. Oh, Hood was a hot one today, right? Hood everybody knows Hood, that's Robin Hood, right? Trashed for the first few days that this thing came out. It's only had a few days of trading, right? Yeah.
Yep.
So stock traded as low as $33. Today, I think it closed at 49 and 52 after hours. This thing is up another $4. During the day in this stock, I said several times that this stock was probably going to go to 50 today. But I want to show you a couple of trades that we did. And we do this, guys, we buy stocks and we sell stocks, okay? If a stock is going down, we're looking for a support level to get long. And if a stock is going up, we look for a resistance level to get short. And when stocks get really stretched out, as this stock did at 1:30 this afternoon, this is one of the trades that we do that we call a far from moving average trade. Probably a 90 percentile success rate trade. P.S. guys, I hate to even say it, we have not had a losing month in the last, 17 months that we've been trading. Last month is spectacular. Monday and Tuesday so far have been insane. The bottom line is that we make money on a lot more trades than we lose because we're very patient, we're very disciplined. We put our money management skills into play on every trade that we do, and we wait for our charts to tell us to make a trade. So whether you're doing longer term trading or shorter term trading, it's still all about technical analysis. And, there is no holy grail, right? Jake came out earlier and showed us some beautiful things in technical analysis for a little longer term trades. And there's no ego in trading. I'm doing this for 35 years. I learn every single day, or I hope to learn every single day. And I incorporate new things into my trading all the time. This isn't trading 30 years ago, right? This is fast, this is furious, and you really have to know what you're doing and especially have your money management in place. So this is a trade that we do. It's called the far from moving average trade. And at 1:30, this stock was, and Jake will know what I'm talking about when I talk about relative strength right here. This stock went from $45 to $49, went up $4 in one green bar. Relative strength, which we measure down here, got to about 80. For those people who don't know, when a relative strength gets to 80, it is said that a stock is overbought and should come down at some point soon. And when its relative strength gets below 20, the stock is oversold and it should bounce sometime soon. So this stock, we didn't have to average in at any point. It told us when it was going to start going down, when we hit this red bar right here, and we got into trade about $48.50, and 20 minutes later, the stock was down $2.50. Another trade that everybody in the room took that we made money on today also. It also works, our technical analysis, when we do swing trades. I will do a swing trade when I see something that's got extremely overbought to the upside or oversold to the downside. So recently we got into AMD, and I'll show you why. We got into it today, actually. AMD had earnings out recently, a few days ago, and the stock went up 1, 2, 3, 4, 5 days in a row. Look where the relative strength got to today, guys and girls. It got to 85 today. That is almost as overbought as you're going to see a stock. I know the reason it was up was earnings, but today was a day we got involved on the short side, over the 114 level. And you can see at one point during the day today, the stock pulled back all the way down to 112, where it gave us a buying opportunity. And that's a story for another day. But so we are using our technical analysis for short-term trading and long-term trading. How many people in this room are actively trading? Give me some ones if you're actively trading every day. So most people who are visiting us tonight are actively trading every day. All right, that's a beautiful thing. I want to impress upon you, everybody who's doing that, how important it is, number one, to find a system that works for you, and number two, to employ your money management rules. There's no holy grail, okay? Everybody should know that. I tell people who are just starting to do this that this is a 3 to 6 month learning process, especially if you're going to be actively day trading every single day. And again, it's a different ballgame, right? This is different than your swing trading and your investing. We actively day trade every day. I do swing trading, and we also do options trading. I mostly will use options trading to get into a position by maybe selling a naked put or a naked call, which is a little more advanced. Or before earnings come out, I might be looking to do a little option. I'm going to show you something in a couple of minutes that we're going to do in Myrna before their earnings come out. I'll show you that stock's been absolutely redonkadonk. Here is a longer term trade that we did, a swing trade. And the stock was LABU. And the stock literally went from 185 to $71. The stock went down 60%. And if you look on our weekly chart and our 200 EMA, which is the strongest, the EMAs go from the weakest, 9 and 15, 65 stronger, and the 200 we like to call the Great Wall of China. I'm going to make this trade 99 out of 100% of the time. This stock went down more than 65%, hit our weekly level at about $71, and within a week from that went up 35 points. So the reason we were able to take a lot out of this trade is because the stock went down $100. And whenever a stock makes a giant move, even during the day, we can expect a certain retracement of that move. So you can usually expect between a 30 and 50% retracement of a move that a stock makes. And the stock went down 100 points. And within a week and a half, 2 weeks, it went up 30 points. That was our profit target. And we got out of the trade between $15 and $30. So again, everything that we do is based on technical analysis. In with that, we throw in our money management. And that's how you become successful as a day trader. If you follow all these rules, and again, I'm not telling anybody exactly what technical analysis to use, you're going to make on more trades than you lose. And if you're doing that, okay, that doesn't guarantee you're going to make money, right? I've had people tell me that, and I've seen people tell me, I make money on 90% of my trades. All right. Well, Jake will tell you, Peter will tell you, and anyone who's ever traded in their life before, that doesn't mean anything if the 10% of your trades is 5 times as much as you made on the 90% of your trades, right? So just because someone tells you they make money on 90% of the trades doesn't even mean they're making money. It's not how much money you make, it's how much money you keep, right? That's the most important thing. So Myrna, I'll leave you guys with this, and then I'm going to let Pete finish up for me. Myrna is a stock that has been absolutely on fire. Let's look at this stock, okay? On a weekly chart. Look at this stock on a weekly chart, guys. It is 100 points above the moving average on a weekly chart. The RSI on a weekly chart is 85. And the earnings are coming out on Thursday morning. I don't think there's any way on God's green earth that their earnings are going to justify this move. This is because of the virus been kicking up lately, and we didn't do anything today. Tomorrow, what we're going to do in this, and again, I will never short this stock. It's too expensive. I don't want to short this stock, and your risk is unlimited. What we're going to look to do in this is buy a put. What that means is we're going to look to buy an option that's not far from where the stock is trading, probably tomorrow. And we'll know exactly what our risk is, the most that we can lose. And the last time we did a short in a stock like this, and I think it was Myrna.
It was Myrna. It was
Yeah.
Myrna.
Here's the last time we did this in Myrna. And again, I went back to my daily chart and we had an RSI of 90 this day.
It went down
And
40 bucks midday.
yeah, we got into this short around 360 with puts. We bought puts. Some people shorted the stock. The same day it went down 54 points. The same day. There were people in my room that bought puts at like $3 or $4 that sold them at $30 and $40 at the end of the day. So I think we got something like that setting up again. So we're going to look tomorrow and buy some in the money puts in this stock. Again, we'll know the most we can lose and we'll see what happens going into the earnings. So I know we don't have a ton of time today, guys and girls. So everything really depends on what your expectations are, whether you're a short-term trader, whether you're a long-term trader, doesn't really matter. I will tell everybody that's in this room what me and Peter have curated and what we do. And I've taught, Peter said thousands of people. I've taught hundreds of thousands of people how to trade. I did a video with Investopedia many years ago, who has 10 million unique visitors a month. I think they're still selling it. It's really outdated. I don't suggest anyone go and buy it, but the video has done over $5 million in sales. So this new course that me and Peter curated is being sold all over the world. It is for people who know nothing about trading. It is for people who are struggling with their trading. It is for people who are doing well at their trading and just want to take it to the next level. And we've made it as affordable as possible for everybody. And we give mentorship every Thursday night. So two things that we do that are different from everybody else. One, in my daily trading room, I am with my traders for 140 hours a month. I trade live every single day with all of my traders, okay? For better or for worse, they're seeing every single trade that I do in a real money account. Obviously, everybody trades at their own risk and yada, yada, yada. What we did with our courses, we will mentor you on every Thursday night. I think we're up to almost 100 people now in a very short period of time. And we go through the course with you and we answer any questions that you have about anything. If you guys have any questions about anything that I talked about, pop them up. I will address them. I know I've taken a little bit more than my allotted time. I'm going to pass it back to Peter. And if any questions pop up there, I will be more than happy to answer any questions. I want to thank you guys for giving me and Peter this opportunity to join you guys here today. Jake, it was an absolute pleasure meeting you. I hope that we can do some kind of collaboration at some point. Again, I'm always willing to learn what anybody has to say out there. And go ahead, Pete, take it away.
Thanks, guys. Awesome, David. Wow, that was great. I never get bored listening to this stuff because it's so exciting. It's so relevant. And the generational moves that the market's making now are incredible. One thing I will say that's super important that what we do, the difference is, guys, so what Jake does, and it's a little longer term trading, is one thing. It's completely different. We are not investment advisors. We are day traders trying to teach you technical analysis around short-term trading to make a couple $100 a day, $1,000 a week, $5,000 a month, whatever it is. We have a planned strategy on every trade we get in. I know David's dropped a line about risk management. For those of you who don't really understand what we mean by it, that's never entering an order on the long side or the short side without having a stop order. What that means is we're here to hit singles and doubles and not wait around for home runs that will, once you go to the till once or twice, you end up blowing up your account. So that's one thing. The second thing is we are all about price action. David talked about that in the beginning of it. Sometimes we don't know the stock we're trading. We don't have an opinion about a stock. We don't have opinion about earnings. We don't have opinion about news about a stock. We let the earnings come out. We let the news come out, and we let the price action determine, once we plug in technical analysis, where we know the probability is that a stock will stop going down and reverse and go up, or it'll stop going up and it'll roll over and go down. So that's what we do. It's very particular. It's super exciting. It's fun. It's a way of making disposable income, whether you want to become a trader, whether you want to use this for your resume, for your next job somewhere in finance, whether you want to just take your trading to the next level. It's simple. It's affordable. It's fun. We're engaging. We're always available. The mentorship part is super, super fun. And this is an opportunity that's unmatched in history to be doing this in this market, right? Yet again, it's also the most dangerous time because, as you could see from the graphs David just showed you, stocks are moving up and down radically for no reason, right? And if we try and figure it out, nothing in this whole program says figure it out. It just says use technical analysis, plug that in to price action, and we can give you the probability to make more money times than you lose. So I hope we can do this again. Guys at Trendspider, thanks for letting us join you, and I hope we can do some stuff together. Gav at Wolf, we love you guys, and thank you.
We'd love to have you guys on the show sometime. So we'll chat outside of the Zoom link and get something set up.
Yes, sir.
Sounds good to me.
Absolutely.
We are always available.
And don't go anywhere yet, attendees. We still have Dan tonight.
Dan.
Yeah.
Go Dan.
We'll be having some
Dan
good
the
stuff
man.
yeah, David, that was awesome. I texted Peter during it. I said, David's incredible. We need to get him on a Twitter space soon. So I don't know if you've been on any Twitter spaces, but
I'll tell you, Gav. I think me and Pete have been the best kept secret on Wall Street for a long, long time. I have not, and nor has Peter, made many collaborations with anyone. And I think the reason we got into this is because of the pandemic and because of so many people that I know for a fact just got life savings wiped out. You know, we heard about all the people who made money, but trust me, there's a lot more that lost a lot of money during this. And we've tried to come up with an affordable way to teach people who learn how to do this. And, you know, it's our life's work and it's our pleasure. You can tell by our voices that we just love doing this. To me, it's like playing in a Super Bowl every day. So again, I thank you guys for the opportunity.
Well, best kept secret no longer because I'm about to put it out to the world. So sorry.
Thanks, yeah.
All right. Well, Peter, absolutely. Peter's doing spaces with us with Wolf every single Monday. We do a 10 a.m., market open. Oh, Peter, guess who's coming on spaces with us this Monday morning? He's actually Catherine Ross. So.
All right. My girl.
We'll have Catherine Ross. She's going to come on at 10 with you. So that'll be really fun. And we'll also have Richard Moglin on. What'd you say?
And we'll get David come on and we'll do some live trading.
Yeah, Gav, I can do some live trading with you guys. We can set that up also. The opening is the best time. It's the craziest time. It's the move around best time, and it's the funnest time. So yeah, we can set that up also.
Absolutely. Yeah, we'll definitely continue to chat. But I don't want to take too much of the live trading. Can you get a link? Yeah, I think David dropped the link. Snared, absolutely snared. Okay, all right. All right,
let's not take up any more time. Let's go.
Yeah, last speaker of the evening is going to be Dan, CEO at Trendspider. He's already posted on Twitter a little bit about what he's going to be talking about. So hopefully some people in the audience are ready for that. Dan, floor is yours.
Cool. Hi. Thanks for having us on. David, Peter, really interesting stuff. Great to meet you and really cool to hear how you guys work. I was going to come on here and show you guys a few charts that I find interesting. One of they're all trades that I'm in. So everything you see here I've bet on. Where did my list go? There we go. Can you guys see my screen?
Yes, sir.
All right, cool.
Yep.
Yeah. Sorry if it's a little small. I'm one of those nerds who likes everything to be very small. I'm a CEO of Trendspider, right? We built Trendspider partially because all the trading software out there, at least in my personal opinion, was kind of crappy. And I wanted to build something that worked for technical traders, was designed specifically for technical traders, right? Because there's a lot of tools out there, and very few of them bring enterprise level tech to the retail crowd, right? And I'm in Chicago. I have a lot of friends in hedge funds and prop trading firms out here. I've spent a lot of time in the infrastructure industry and sold a lot of them servers over the years, right? That's actually one of the ways that I got into trading in the first place. And it's pretty interesting how much money and resources professional trading organizations, Peter and David know this, invest in technology, right? I know prop shops that are comprised entirely of developers, right? Developer trader kind of hybrid humans, right? Where they automate their strategies using data that none of us retail people can get access to, right? And then they let their bots kind of take us to the cleaners. So we wanted to build tools that brought enterprise grade, bank grade tech, hedge fund grade tech to the retail crowd. That's what Trendspider is. It's, as Jake alluded to, it does a lot of things, but it's a pretty comprehensive platform. It goes all the way from scanning to backtesting to alerting to analysis and a whole bunch of stuff in between. And it's what I use exclusively for all my trading. So I enter orders on IBKR, but I do all my analysis, all my scanning, everything in the Trendspider software. So I'm eating the same pudding that we're selling out there to everybody out there. So I'm going to touch on a few trades that I'm in, some newer, some older. I tend to trade stocks that are not as crowded. Not all of them. I definitely get into some crowded trades occasionally, but I like to find stocks that are not things people are talking about, right? Which is sometimes tough given how social media is just so prevalent. There's always somebody talking about something, right? But I try to find companies and names that are under the radar, right? Because and beat down, I'm very much a bottom fisher in a lot of ways, and I like to take them on long swings, right? So I'm going to touch on a few of those, and the one I posted on Twitter is one that I'm really proud of, right? Because a lot of people told me I was insane for trading this thing when I did. But this is Conformis, which is a company that makes like 3D printed artificial hips and like artificial knees, right? They're small, right? I think they do like 10 or $20 million in revenue a quarter, right? They've got like 300 employees. They have a few really good things going for them, though, including they're trading under their book value, right? So that's like one of the fundamental things that got me interested in this. I also saw, I got to give a shout out here, right? I saw my friend Ripster post this name, right? He was just day trading it, but that's actually how I discovered it in the very first place. And here's what the chart looked like when I entered this, right? This was December 30th. So this was at the end of last year. I've been in this trade for quite a long time now, right? It was trading at 72 cents. I posted this chart to Twitter and told the world I bought it here, right? I got a bunch of DMs from a number of people actually who were like, what are you doing? That's a crappy penny stock. It's not worth jack shit. And it is a crappy penny stock that's probably not worth jack shit, but it's definitely worth more than it was trading at. So, and this is kind of how it went, right? And I want to show this because much like Jake, right, I'm a very big proponent of volume profile, right? I believe volume is very, very important. And here's what that chart looked like when I entered it, right? So you can see, it had been pulling back for a long time and it started to base. And when you measure the volume profile, for this base, starting where it bottomed and basically all the way forward, including all the price action, this is what the volume profile looked like, right? And this red line, this is the point of control. It's like the popularity contest of stocks, right? This is the most popular price, that transactions were occurring in. Right, so I did a little research. I found out the company's trading at under book, right? Meaning the company's worth more per share, at least on an accounting basis than the market is giving it, right? And it kind of clicks when you see this, right? This is accumulation, right? This is when institutions, when hedge funds, when people with good sized money, smart money as they call it, are accumulating shares, right? They like to buy low. Right, the old adage goes, buy low, sell high, right? I have a t-shirt that says buy high, sell low, right? But that's not what, smart money does, right? So I opened a position at 72 cents. And then I was like, right away, right? I was really happy. If you look back at my tweets, I'm like dancing around the world. I'm like, it feels so great to be right, right? I sold a little bit, right? Somewhere up here. I didn't really mark it on the chart. And then I watched this position melt down. Right. And that's something that you see a lot, right? Like David was saying, you see a retracement, right? That is something very common. And if you're going to be long-term swing trading stocks, you have to be able to sit through them, right? Maybe trade around your position a little bit, right? Sell when it's high, buy when it's low, right? But you have to be able to sit through drawdowns, right? And sometimes these things can last a long time, right? In this case, right, this drawdown lasted, like 3 months, right? And then your RSI start to diverge again, right? You start to see more accumulation. If you measure the volume profile here again, you'd see the same thing, right? And then you're ready for the next leg up. So this stock, hold on one second. It's getting cold. I had to close the window and turn the cricket noise off. But this stock then rallied, right? And then it retraced again, right? And if you measure the volume profile in that retracement, you're going to see the same thing, right? And then today, right, the reason I'm so excited about it is after hours, this thing kind of went crazy, right? This chart includes after hours data, right? So now I'm up over 100% on common shares on this thing, which is pretty fucking awesome. And you know, I think it can probably ride a little longer, right? I very often use fibs, right? So here I have a fib retracement from high to low, right? To give you an idea as to where it may struggle next, right? I wouldn't be surprised if it were to pull back kind of to my yellow box there, or maybe that 236 fib retrace level. But ultimately, you know, like I'm in this one for a while, right? Now, the thing that I think a lot of traders, and David or Peter were talking about this, but a lot of traders mess up with is not thinking through pullbacks ahead of time, right? And therefore not managing the risk. You know, like I do have a stop on this. It's pretty low, right? Or at least it was, you know, when it rallied here, my stop was, you know, this VWAP level here, this yellow line at about 80 cents, because I did expect a nasty pullback, right? Like when this big, powerful move goes up, gravity is real, right? What goes up usually comes down, and it comes down, you know, with the same velocity that went up. I don't think that's an actual physics rule, but it's a market rule that I think of. Right, so that's why I did this trade, and I think it's a very interesting one. Possibly has more room to run. Right, my price targets on it are about 270, right around the 50% mark, and if it can get above that, not oops, I didn't mean to move my fibs there, but if it can get above there, you know, I want to just ride the fibs up, you know, and I fully expect it to be choppy, right? You know, fundamentally, I don't think this company is reasonably worth, you know, $5 or $6 a share. So if it gets up that high, I'll probably close the whole position. Right. But, you know, what I've been doing in the meanwhile is just kind of trading around it, right? Like sell low on big days and good days, right? Buy a little bit of it back when it pulls back. So my current basis on it has gone up, right? It's 89 cents now instead of 72 because of that trading around it being higher than when it got in. But nonetheless, it's a fucking awesome trade, pardon my French, right? I'm really, really happy with it. And it's also an interesting opportunity to highlight something, right? I'm sorry, I'm mixing up David and Peter here, but one of them was talking about RSI, right? I think it was David. You know, and watching for when things get overbought and oversold. I do that too, but you know, I don't believe in using a fixed number for it. You know, like the rule that 80 is oversold and 20 is overbought, or 70-30 or whatever you have it set to. You know, I don't think the market follows those rules with too much religiousness, right? Like it happens, right? You know, but a better way to measure it for me has been to use Bollinger Bands around my RSI, right? And that's what you see here. You see a 10-period RSI, which is the Dan standard, right? You have a 20-period Bollinger Band around it with the standard 2 deviations up and down, right? And you know, sometimes it works out exactly the same. Like right here on Conformist, right, in June, right, RSI hit 92. Really overbought, and you had this pullback occur after that. But sometimes that happens, you know, lower, right? Like down here, you had this sharp move up, right? And your RSI exceeded the Bollinger Band. That's why it highlighted it in gray on the screen. That's and you had a pullback after that, right? You know, so this is a more dynamic way to look at relative strength. It's something that you know, really changed how I think about charts. You know, I used to be very big on looking for divergences, even up to like earlier this year. Now, since we added this indicator to the system, right, this has become kind of my exclusive way to look at it, right? It's overbought if it can get close or below, right, the lower Bollinger Band, and it's oversold if it can get above the upper one. And then we have this handy capability to highlight these areas, right? I only have the overbought one highlighted, right? But you can highlight it on both sides. Actually, I do have them both. I forgot I didn't turn that on because this is overbought down here. So I just wanted to share that because that's something that I use a lot, and it's really helped me in my trading, right? It's redefining how you think about overbought and oversold when it comes to RSI. Because RSI is an old indicator. It's been around for a long time, right? It's one of the first technical indicators, you know, to hit the retail world. And it's a choppy calculation, right? Like if you actually dig into the math behind it, that's why it has like very choppy shape to it. right? And if you try to smooth it out by throwing a moving average on it or making the period longer, you slow down your signals to the point where, by the time you can react to it, it's too late, right? So this is just a way to make RSI modern again by making it more dynamic. So I thought, hopefully that's a helpful tidbit to share. So that's Conformis. I'm a huge fan of this trade. I'm very proud of it, obviously. I'm in risk management mode here, so I'll probably take a little bit off tomorrow because I'm going to expect it to pull back some. I'll probably add it back, right? But I plan to stay in this one for a while in one way or another. I'm also going to touch on ARK-K. This is the Kathy Woods flagship ETF, their innovation fund, the oldest ARK fund and the one that really put them on the map. And it's a new position for me. I just opened this, it was either yesterday or the day before, right? It was very, very recently. And I want to tell you guys why I did that, right? So you can get a sense for, for what I'm looking at here. Right, first off, let's start with the RSI down here, right? You had this bounce, right? This big bounce from about 97 bucks up to 130, right? And then you had the RSI tag the top Bollinger Band here, right? And you can see how almost immediately you had a reaction, right? Now, keep in mind, it's not like it's not like every time RSI tags the line, it's going to pull back, because you can see multiple times it has done that, right? But it does generally mean some kind of pullback, right? Like each time you see it touching or coming near this band, you do have a small pullback, right? Here you have a touch in the 80s and a big pullback, right? And what happened on that pullback? Well, the RSI pushed down against the bottom Bollinger Band now, right? That's sign one, right, for me, right? We have reached what, could arguably called a dynamic kind of oversold level, right? Sign two for me is when you anchor a volume weighted average price, right? I'm a huge fan of VWAP. Jake is too. And I remember when Brian Shannon presented this at Cloud Expo, basically begging him to let us put it into Trendspider because it was so impressive watching him present it. And this indicator is uncanny accurate, right? I mean, you see price like respect it all the time when you have proper anchoring. And what I do is I always anchor at if it's a pullback, at the highest high or the most recent major swing high, right? Which for ARK was in February up here at 160 or so, right? So I right click on the candle and I go to anchor VWAP here, right? Create alpha trends anchored VWAP here. And that puts this blue line on my chart. And then I look at it and see, has price respected it? Why, yes, it has, right? First, in March, it rallied to it, couldn't stay above it, pulled back, right? Then again in April, rallied to it, got above it for a little bit, couldn't stay above it, pulled back. Then again, later in April, popped above it, looked toppy, crashed pretty dang hard, right? And and by the way, if you look at the RSI at each of these, right, like each of these points where it pulls back is getting very close to the Bollinger Band. It didn't touch it exactly, but it got damn close to it, right? And then you had this big pullback, right? And from that pullback, you had this big rally that got over this level. And then you have the opposite happening. Right now, price pulled back, got below it, couldn't stay under it, and popped back above. Did it again, right? And price is now staying above this this anchored VWAP level, right? Even on today's kind of red close, right? It closed above that level. So for me, that's sign number two, right? It is respecting a major anchored VWAP, which is another dynamic type of level, and that VWAP is measured from the all-time high. And what that's essentially telling you is that on a volume weighted average basis, everyone who bought it from this high forward, on average, is green, right? They're not likely to sell, they're more likely to add here, right? The opposite was true on the way up, right? Like people were red, and as they got close to their break even, they're like, I'm getting out, right? That's why they sold up here, right? That's why they sold up here and here, right? And once we popped above it and retested it, now people are like, oh shit, I missed my chance down here, right? Now I'm gonna buy it, right? And that's creating a floor of demand that's absorbing the supply that's pushing down into it. So that's sign two for me, right? Sign three is when you throw the anchored volume profile on this chart, right? So I throw this at the very low, right? At the COVID low, right? And if you look at all the volume from the COVID low all the way until now, the most popular price level, the point of control, is right around where we're trading right now, right? We're a little bit below, right? So that's telling me that now there's accumulation. We're holding the anchored VWAP from the high, right? The RSI volatility thing, bottomed out essentially, right? Could I be wrong here? I mean, we are below this this volume shelf here, right? We're not above it. I would much prefer to be above it, right? But we're not, right? So, could that, screw me up here? Probably. But luckily, I have a very tight stop, right? The stop is basically this anchored VWAP. Like, I just want to, I'm not like measuring like a precise stop, but if we can't hold it, right? If we start to break down towards it, below it, right? Retest it, can't get back above it, right? That is a good sign that I'm probably wrong. I can get out, right? This is good risk versus reward for me. And then, initial price target, right? I want to get it into this yellow box, right? Which is in between, I mentioned these bids, right? It's in between the 236 retracement. I think that's from the very low, right? A high to low or low to high retracement, and the 618, which is measured high to low, right? It created this nice little area here that has confluence with where price has kind of bounced and found support and resistance in the past, right? So that's kind of my trade here. Am I going to sell it if it gets up there? Probably not. I'll probably move my stop higher, right? I'll probably anchor a new VWAP, at this high, right? And see where that is, like I'll probably, try to find ways to ride it longer, kind of like I did CFMS, because I do think that ARC is a good ETF, right? Like I do think they do a good job selecting names on a fundamental basis. And I'm very much a techno fundamental trader. Like I like to find, reasons to buy something and hold something in both categories instead of just one or the other. So that's ARK, a trade I'm kind of excited about. It's got to break out of this descending area here. It's got to get over this anchored VWAP. It's got to get over this fib level, this volume shelf, right? There's definitely resistance above and reason to be alarmed and concerned, right? And exercise caution as you trade it. But it also has a lot of potential in my eyes, right? So that's one. I'm gonna also, someone asked me on Twitter to touch on HIMS. I know Jake touched on it, so I'm not gonna spend a lot of time on it, right? That's not HIMS though, that's edit. But this is HIMS, right? So HIMS is a trade. I opened at the same time as I opened ARC, so it was either yesterday or the day before, right? And you can see why pretty clearly on my chart here, at least maybe if you have my brain. But you have first RSI is getting very tight. Right, this is another way that I use this, by the way. Like tight volatility ranges expand into wide ones. Right. What is likely to happen is there's not a lot of room to go down in the RSI at this point. So it's likely to go up and expand the range of the RSI and then pull back. Right, get back to the bottom of it, and then from there, have an expanded range to work in. You kind of see the same thing happen earlier this year, where it was tight. You had a rally that expanded the range. You had a pullback, then more consolidation and kind of rinse and repeat. But like if you look at the volume profile here, right, just measuring this move along this little dotted line at the bottom of my screen, this one almost 2 month long move, right? The point of control is down here, right? That's telling me that big money is accumulating shares, right? We found a floor where people are willing to scoop up anything you want to sell them, right? That can also be a good risk level, right? Like, since you can't really anchor a VWAP here, because you can't really anchor one on this chart where it'll be below price, right? You have a point of control, set your stop somewhere below it. That's what I'm doing, right? Like if we can't stay above this red line here, right, I'm going to start getting a little bit concerned. But that's why I like it too, because it gives me good risk versus reward, right? The point of control is very close to where I entered, and there's really only one way to go up. And my target here would be about $10, right? Because that is the VWAP, right? This yellow line here of the same measured move down, right? So I would like to see it get there. I'll probably throw some fibs on it once it starts going my way, and put a little more thought into into stops and managing risk. But because I'm very early in this trade, I haven't done that. I usually focus on one thing at a time. Other things I like about this chart, this big kind of, this is, in my opinion, a retest that forms a falling wedge, right? But the initial trend line started in April and, touched late April, touched in May, got broken through in a bullish way in late May. You had this rally, and now you have this crazy pullback. Well, to me, it's very interesting that it pulled back, found a new point of control right around the line that used to be resistance, right? So to me, that's a falling wedge with a decent amount of conviction. And then if you measure all the volume, right, since this thing was a stack, right, since you measure all the volume on this thing, right? Yes, the point of control since trading commencement is around 1075, right? But it is forming a new volume node down here in the $8 range. You can see it clearly on the volume profile, right? And if you measure only from here, you can see it very clearly, right? So that's telling me that serious volume relative to everything that's all the volume that's ever traded the same ever, right, is coming in here, right? You know, and props to Jake, because this name fell off my radar. I saw him post it, and actually that's why I looked at it again and decided to trade it again. So thank you, Jake. Good luck to us all on that one.
Let's go.
I could go on for days, so I'm not going to. I'll touch on two more charts, and then I'll shut up. Next one I'm going to touch on is Sumo here. Sumo is a tech play, right? Software company, or something about software. I don't really know what they do, right? It's a trade that I've been in for some time, right? So, you know, and I've been in and out of this one a lot. You know, probably traded it maybe 10 times. It's an interesting one to trade. And I wanted to highlight this one. I do have a position. It's not a huge one. I've been in it for a little while, right? But what I do like it right now quite a bit for a lot of the same reasons as I like some of the other names that I talked about here, right? You know, you have the volume shelf building at lows after big pullback, after kind of, you know, bottomed out a bit. You have, you know, essentially a retest, right, of this trend line. It's not precise, but this pink line forming up here, right? Like it broke out in a bullish way, did some stuff here, made a divergent high, crashed, pulled back, right, almost to that line, and then bounced up there. And now it's pinched between the anchored VWAP from the high and the anchored VWAP from the all-time low, right? I love that setup when there's a volume shelf building. You know, for me, it's high probability, you know, because the volume shelf is telling me that there's a lot of people selling here. There are probably people who bought way up top and they're just giving up, right? But somebody's buying it and the price isn't crashing, right? Like the price is staying flat despite all that selling, because every buy requires a sell. So, and then, you know, for me, my price target is going to be this fib level up here, about 26 bucks, right? Again, I'm probably not going to sell it when it gets there. I'm probably just going to get into some serious risk management mode and try to ride it longer, because I do think Sumo is a really good business. You know, at least from what I've read on like Seeking Alpha about it, it seems like a good business. And it did have some big moves in the past, so it's possible it could get back up to its all-time highs. I'm not betting on that, right? But you know, I'm going to start looking, you know, to find some way to manage risk, or possibly take some off or trade around it when it gets kind of closer to this mid level here. And then last but not least, my favorite stock that I talk about way too much, that I wouldn't do anyone justice here, or may not do people justice by talking about, but I'm a big fan of Palantir. Right. And I've been a bull of Palantir for a long time. You know, I got into it a little early, right? My basis in it is like 22.30 or something, right? But I originally opened my position on this in like the 25s, and I did average down, right? You know, I like it for a lot of the same reasons, right? For one, you do have resistance, serious resistance on this one. So it's not for the faint of heart, right? Like you have to have some conviction in this trade, because you have the anchored VWAP from the IPO directly above. You have the volume shelf, the point of control, right, from the IPO above. There's fib levels above, right? Like there's a lot of stuff that is reason to be concerned about this. But you also have some reasons to be bullish, right? You have an ascending triangle forming here. That's a pattern that I've had a lot of luck trading, right? I really love ascending triangles. You have the RSI thing, right? You have RSI get tight, right? Hit the top level, pull back, expand the range of the Bollinger Bands, and right, and then as it's been forming this consolidation, right, kind of flatten out a little bit. You know, you have some momentum from the past to consider, right? Because I traded this name from like 10 bucks up to like 20, you know, in this run back here, right? And there were like so many times during it where it's like, oh God, like this is just wild. But you have to understand that big moves are followed by long periods of consolidation, right? Big moves and consolidation happens one of two ways, sometimes both, right? One way is a sharp price decline or price pullback, right? A 50% retrace, a 618 retrace, whatever. The other way is they spend a lot of time trading in a range, right? And in PLTR, you kind of have both, right? Like everybody's really pessimistic. I've seen a bunch of people talk about getting stopped out or just closing their position on this name. recently, right? For me, that's kind of bullish. Like as retail gets shaken out, right? It's kind of bullish. And you can, if you start to look at the volume profile in this with a little more granularity, look at it from the most recent high, right? You can see that accumulation beginning as well, right? Which is definitely a factor of its spending time down here. The more time price spends in a particular price range, the more accumulation occurs there, right? Which is kind of obvious when you say it, but not a lot of people realize that. So yeah, those are a few names that I think are interesting. I hope you guys like that. I will shut up now and give it back to Gav.
Thank you so much, Dan. I appreciate that you did Palantir, because that was one where I was going to ask you to do it if you didn't do it. So that was awesome. I think that hit on
To the moon.
Yeah, I think that hit on pretty much everything. The last thing I would say, Jake, you touched on the raindrop charts, right? Because there's a couple of questions I see that are in here.
I can do it again. Do you want me to go over raindrops, or do you want to do it, Jake?
I just know somebody asked, maybe just like benefits, best use cases, etc. I know that we went over this in the last one. I know that Jake, you mentioned in the beginning here that you were going to do it. I was just wondering, did you cover it?
No, I didn't get to it. I can show some benefits to using it and all that real quick if we have time.
Yeah, do we just want to do like 2-3 minutes on that?
Yeah, that works. 1 second.
Cool.
Yeah.
And then I think that's the last of the questions that we had in there. If there's any other questions, this is your chance. You can drop them in to the chat, to the Q&A while Jake's pulling that up, and then we'll probably wrap up after that. And then I'll get this recording up onto the internet and disseminate it.
All right. Can you see my screen?
Yes, sir. Perfect.
All right, awesome. So, so the raindrop chart, sorry I didn't get to this before, but essentially the raindrop chart is a volume weighted candle. So what a lot of people do, let's say that they want to see kind of what happened at a specific price and a specific volume level. Generally, you have to go to a lower time frame, and whether that's a 5-minute chart, whatever chart you're looking at, maybe even a 1-minute chart. Generally, you have to, let's say that today you wanted to see where a bunch of volume came in for Boeing or a different stock. You're gonna have to go to the lower time frame. But using a raindrop chart, you can actually see the volume profile of the candle without having to go into a shorter term time frame. So you kind of have 2 different layers to the raindrop candle, if we want to call it that. You've got a volume weighted average price on the left bar. So this bar right here, well, you guys can see it. This bar right here, that is going to be your volume weighted average price for the first half of whatever time frame you're looking at. The right bar is the volume weighted average price for the second half of the time frame that you're looking at, whether that's a daily candle, monthly, 30-minute candle. So it's the same way a bar chart works. So if your right bar is higher than your left bar, it's generally, if you're using a bar chart, your open is higher than your close is higher than your open. It's going to be green. If your volume weighted average price during the second half of the time frame you're looking at is higher than the first half, it's going to be green as well. And then on top of that, the second layer to this is actually being able to see the volume profile of the left-hand side, which is the first half of the day, and the right-hand side, which is the second half of the day. So this allows you to see where volume was flowing, where buyers had conviction, and it really kind of comes down to supply and demand and being able to see the aggressiveness and the conviction by buyers. Because for every buyer, there's a seller. For every seller, there's a buyer. But the volume profile really represents where those buyers have conviction or have a lack of conviction. So the different color raindrops are simply just a function of that second half of the candle's VWAP. So in this case, the bullish raindrop, your volume weighted average price is going to be higher than the left-hand volume weighted average price, making it a bullish. The neutral raindrop is when the volume weighted average price during the first and the second half of the time frame are equal. So purple, blue, whatever color you think that is, but you can always change that color on the platform too to orange. I've seen some people use yellow. And then the bearish raindrop is just the opposite of the bullish, where your VWAP during the second half of the candle is lower than the first half. So no different than your close being lower than your open. It's going to be red on a bar chart. With the raindrop, same thing. VWAP bar on the right-hand side is lower than the left. It's going to be red. Now, the benefits to using this are really being able to see what's going on within the candle. So anytime you have a candle with a wick, my go-to is really to look and see what happened within that wick. Was there volume in that wick? If that's the case, I know there was likely conviction by buyers. So it becomes more of a function of the demand curve rather than the supply curve on that pullback, which creates the wick. So I'll go over an example of that, what I mean by that here in a second. But really the best way to use this is around resistance and support zones. So seeing, okay, there's a wick above resistance. Is there actually volume within that wick? And then the third one is looking for discrepancies between a green candle and a red raindrop, or a red candle and a green raindrop. I definitely put more weight on the color of the raindrop versus the candle. So one of my favorite examples to show is Spotify. So this was a few months ago. You can pretty much see here that, let me just get rid of the sidebar. You can see that we had this resistance line, make this red. And so you can see that we did try to break above it here in October. So what's interesting is, as I mentioned, this kind of is right what we're looking at. You've got a wick in the candle. You've got an attempt at breaking through resistance. And then what I like to do is I like to just split the screen, zoom in on the candle, turn on the raindrop on the right-hand side chart. And you can see that this highlighted orange raindrop is the same day as the candle here. So we've got a couple things. One, you've got a green candle, a hollow candle. I use hollow candles. I don't use regular candles. If I was using regular candles, this would be green. But a hollow candle showing that, you know, your close is higher than your open, and we closed higher than the previous day, making it hollow and then making it green. But then notice here, we've got a red raindrop. So you've got the divergence here. You've got the red raindrop, which I would definitely, look at stronger than this green close. On top of that, you've got the wick. So what's going on within this wick? Well, you can see within this wick, with the right-hand side chart, you don't have much volume profile up here. So what does that tell me? It tells me that whatever spike occurred on that within that wick was on low volume. It could have been just in a liquid market to the upside. Maybe there weren't a lot of sellers and somebody spiked the price up, and then immediately when that price went up, there were no buyers, and the price had to drop in order to find buyers. So anytime you don't have volume profile within the wick, that is definitely a red flag. So you've got the different color here. You've got a green candle, red raindrop. That's definitely red flag number one. Red flag number two is with this wick over resistance, there's no volume profile. There's no conviction by buyers above this resistance. That's your reversal point. Now, I'm not going to say that, you have this type of waterfall after this type of divergence. That's just a pretty prime example, but this is what you want to be looking for. And you want to be looking for that volume profile at the top of the range. So take, for example, Lowe's, which has a very similar example, except the opposite here. So in this case, you've got resistance, you've got this orange highlighted area, you've got your green candle, but you have a green raindrop. That's check number one. Check number two, you've got this wick, but within this wick, you have this volume profile above resistance. So to me, that tells me that there is conviction by buyers, because for every buyer, there's a seller. For every seller, there's a buyer. So, we can't say, oh, that's buying volume, but we can say that there was conviction by buyers willing to absorb supply. If I'm going to sell 1 million shares above, and let's say I'm an institution or something, not necessarily a retail trader, but let's say I'm an institution, I want to get rid of 1 million shares above resistance, I have to find a buyer. If there's no buyer willing to absorb that supply, then I'm going to have to drop the price. So the fact that there is a buyer willing to aggregate and absorb that supply above resistance creates this bulge in volume. So imagine a sponge, right? The sponge is demand, the water is supply. If you pour water on a sponge that's dry, the sponge is going to expand because that sponge is absorbing that water. Imagine that being your demand. This dry sponge is demand that's willing to absorb that water. If you have a sponge that's already full of water and you pour water on it, that water is just going to fall through the bottom because there's no more dryness in the sponge to absorb that water. Same with the market. If there's no buyers to absorb that supply, the price has to drop. So this wick essentially is a function of the demand curve, because what happens is we know that there were aggressive buyers here because that volume is aggregating above resistance. So instead of sellers coming in, what likely happened was your demand curve shifted because you had aggressive buyers coming in. And once those buyers were done with their buying campaign for the day, the price was able to drop simply because the supply and demand get back at an equilibrium, because that demand curve shifts to the left. There's less quantity demanded because those buyers are done buying. So a lot of people look at wicks and they immediately assume, oh, that's sellers. But that's not always the case. Prices drop not always because there's an increase in sellers. You can always have the supply and demand curve shift different ways. And so if you are interested in learning more about, raindrops, I would definitely recommend checking out some of the videos that I've made on the supply and demand curve shifts. It will definitely help you understand how prices are moving, why they're moving. And raindrops are really helpful for this type of thing. Looking for divergence across the color of the regular candle versus the raindrop, as well as looking at discrepancies within that wick. So hopefully that was helpful in understanding the raindrops.
Amazing. Especially that graphic at the beginning, I think was really, really helpful, Jake.
Awesome. Glad to hear.
Perfect. I think that covers everything, for tonight then. And, thank you to everyone who was here for the entire time. This all was recorded and is going to go up by tomorrow at the latest onto my YouTube and Spotify. And I'll get that link over and out to everybody. For the people who are here, yes, please, thank you to our panelists. If you want to say thank you to any of our speakers, feel free to drop that in the chat. They took time out of their nights and did this for free, which was amazing. And
thanks,
if you want to check out Trendspider, I know that they sometimes have some little discounts or nuggets that they'll drop here and there. Jake has those with the opportunity. For sure, follow them all on Twitter. Jake posts tons and tons of charts every day on Twitter. And I know Dan does, and Peter's definitely been active as well. And we'll get David a little more active. We'll get him into some of these Twitter spaces, but I think that covers everything. Let's just go to the panelists real quick. If there's anything they want to wrap up with. Peter, anything you want to wrap up with?
Sure, guys. Thanks. Great to hear everybody. I really appreciate it. Good stuff. Yes. We're just excited to be part of this. And I www.wallstreetglobaltradingacademy.com. There's a website. You can read all about the course, all the sections, see all the stuff. It's back guarantee. We do live stuff on Benzinga every morning, Monday, Tuesday, Wednesday with David Trading the Market Live. Hopefully we'll do it on some Twitch stuff with the Wolf Group. And we look forward to seeing you again next time, guys. Check it out.
Absolutely. David?
Yeah,
I think
I'm here. Thank you, Gav, for having us on tonight. Look forward to more collaborations with everybody. Thank you to Trendspider. Very, very great presentation from you guys tonight. And let's rock and roll. I'll see everybody tomorrow live in my trading room, greenroom-live.com. Everybody's welcome to come and hang out for a 5-day free trial, and wallstreetglobaltradingacademy.com. Thank you again for the opportunity.
Of course, anytime. Jake?
Yep. So
thanks, guys.
Thank you, everybody, for listening in. It was great to do this with some of the greats that actually have traded on the floor. It's just it's really, really humbling to be able to do this with them in this type of capacity. And one thing I'll mention, if you guys do have any questions, you want to try out Trendspider, you can use the coupon code WF25. It's going to get you 25% off any plan. And we always do have the 7-day free trial. Something that's different than Trendspider, different at Trendspider compared to other platforms out there. We are going to help you every step of the way. If you have questions on the platform that you need answered, we have one-on-one demos. You're allowed to get on with a live person and ask these questions with no type of charge or anything like that. It's part of the free trial experience. So make sure to check it out. if you do like it and you want to move forward, definitely use the WF25 coupon code. And that is all from me. And thanks for hosting this.
Absolutely. And Dan?
Yeah, I'll keep it short. Gav, thanks for putting it on. David, Peter, great to meet you guys on here and hear from you. Jake, you're awesome as always. And everyone watching, thanks for listening to this ramble. I appreciate it. It's humbling, all the support and love we get from the trading world, and we're going to keep busting ass to deliver tools that you guys can use to find an edge. So thanks again.
Absolutely. We'll all be back soon. That's all for tonight. I'm going to go ahead and end the recording.